Hello everyone, welcome back to the channel. In this video, we are going to understand the most common types of analysis that the expert investors and the institutional investors employ in Indian share market, which helps them to remain couple of steps ahead of the retail investors. Analysis itself refers to the methodical approach of studying various factors to evaluate the value and potential of stocks or the overall market to make informed investment decisions. The goal of this video is to make you aware of the various types of analysis and not to go into too much of the details. By the end of this video, you would have the clear and fair idea about all of them. So let's start. Before moving on, please read the entire disclaimer carefully. So first type of analysis is the fundamental analysis. Next is the technical analysis. Then is the quantitative analysis. Fourth is the sentiment analysis. Fifth is intermarket analysis. And sixth is the economic analysis. So these six are the most common and majorly used types of analysis in the Indian share market. So let's go into them one by one. Let's start with the fundamental analysis. So fundamental analysis, um, we are going to see what the fundamental analysis is, how does it work, what is the goal of fundamental analysis, and we'll try to understand fundamental analysis by using an analogy. So let's start what it is. Fundamental analysis is the process of evaluating a company's intrinsic value by examining its financial statements, management, industry, and overall economic conditions. It is like being a detective for a business, digging into all the underlying factors that contribute to its actual worth. So, how does it work? Analysts scrutinize company specifics like income statements for revenue, expense, profits, their balance sheets for asset, liabilities, and equity, and cash flow statements to assess financial wealth, profitability, and liquidity. They also evaluate management quality, competitive advantages, brand strength, and new product pipelines. Then they examine the industry's growth prospects, competitive landscape, regulatory environments, and supply demand dynamics. And finally, the broader economic factors like GDP growth, inflation, and interest rates are considered as they impact a company's operating environment and consumer spending. So then what is the goal of fundamental analysis? The goal of fundamental analysis is to determine if a stock's current market price is undervalued or overvalued compared to its true worth. If the intrinsic value is higher than the market price, it might be a good buy for long term investment, that is value investing. Let's try to understand it better with the help of an analogy. Fundamental analysis is like buying a house. After thoroughly checking its foundation, plumbing, roof, neighborhood, and the locality, rather than just looking at its curb appeal or the recent selling price of similar houses. Okay, so let's now move on to the next type of analysis, which is the technical analysis. So, what is technical analysis? Technical analysis is the study of past market data, primarily price and volume, to forecast future price movements. It operates on the belief that all relevant information is already reflected in the price and that history tends to repeat itself due to consistent human psychology. How does it work then? Technical analysts, that is the analysts who do the technical analysis, spend their time looking at the price charts, candlestick, line, bar charts to identify patterns, trends, and support and resistance levels. They use various mathematical indicators derived from price and volume, such as moving averages, that too can be simple moving average or exponential moving average. Then relative strength index, that is RSI, moving average, convergence divergence, that is MACD, and Bollinger Bands, etc., to generate buy sell signals or confirm the trends. They identify recurring chart patterns like head and shoulders, double tops, double bottoms, flags, and triangles, etc., which are believed to signal future price directions. So, what is the goal of technical analysis? To predict the direction of short term to medium term price movements and identify optimal entry and exit point for traders. It is less concerned with why a price moves and more with how is moving and where it might go next. Let's try to understand it with the help of an analogy. Technical analysis is like predicting the weather based on cloud formations, wind patterns, and historical weather data without necessarily understanding the complex atmospheric physics. Okay, now let's move on to the third one, which is the quantitative analysis, also popularly known as the quant analysis. So, what is this quant analysis or the quantitative analysis? Quantitative analysis is a highly systematic and objective approach that uses mathematical models, statistical methods, and computational power to generate vast amount of financial data and make investment decisions. It aims to remove human emotion and bias entirely. How does it work? Quants, that is the analysts who do the quantitative analysis, feed historical data, that is prices, volume, financials, economic indicators, even alternative data like satellite images or social media feeds, etc., into the complex algorithm. They build sophisticated models, for example, using regression, time series analysis, machine learning, to identify statistical relationships, inefficiencies, and predictive patterns. Many quantitative strategies lead to algorithmic trading, where computers execute trades automatically at high speed based on model signals. Quantitative tools are heavily used for precise risk measurement and management. For example, value at risk. So, what is the goal of quantitative analysis? The goal of quantitative analysis is to develop systematic, repeatable strategies that can generate alpha. What is alpha? Alpha is returns over a benchmark. By exploiting statistically significant opportunities across various time frames, often focusing on relative value or arbitrage. Let's try to understand quantitative analysis by an analogy. So, it is like using advanced computer simulations and statistical analysis to predict the trajectory of a complex missile rather than relying on an engineer's experience or a weather forecast. So, basically, the purpose is to remove the human emotions or the biases. Let's move on to the next type of analysis, fourth one, which is the sentiment analysis. What is sentiment analysis? Sentiment analysis studies the collective mood, emotions, and psychological biases of market participants to understand their impact on market prices. It recognizes that fear, greed, and other emotions can drive prices away from fundamental value. So, how does they work? Analysts looks at various proxies like news and social media, investor surveys, put call ratio, volatility index, short interest, etc., for market sentiment. So they conduct, I mean, surveys for investors to gauge their bullish and bearish outlook. They analyze the tone, that is positive, negative, or the neutral for news articles, social media posts, and online forums about specific stocks or the broader market. They watch the put call ratio, a higher ratio of put options, that is the bearish bets, to call options, that is the bullish bets, can signal excessive fear, which might contrarily indicate a market bottom. They monitor the volatility index like the India VIX. A high VIX indicate increased fear and expected market turbulence. They keep an eye out on short interest. High short interest might mean many investors are betting against a stock, which can sometimes leads to a strong short squeeze if the price rises. So, what is the goal of sentiment analysis? The goal of the sentiment analysis is to identify periods of extreme optimism or pessimism that might lead to market overreactions or reversals, often used as a contrarian indicator. If everyone is extremely bullish, it might be a good time to sell, and vice versa. Let's try to understand it with the help of an analogy. It is like being a sociologist studying crowd behavior at a sporting event. Are they cheering wildly, that is greedy, or booing angrily, that is fearful? And what does that imply about the game's momentum? Okay. Now let's move on to the next type of analysis, which is the intermarket analysis. So what is intermarket analysis? Intermarket analysis is the study of relationships and correlation between different asset classes like stocks, bonds, commodities, and currencies, and even different markets to gain insights into the overall financial market and economic trends. Let's see how it works. It is based on the premise that global financial markets are interconnected and influence each other. There are also important key relationships like stocks versus bonds, commodities versus currencies, and commodities are, as economic indicators. So, for stock versus bonds, they often move inversely. When confidence in the economy is high, money flows into stocks. When economic uncertainty rises, investors seek safety in bonds. In commodities versus currencies, commodities like oil or gold are often priced in a specific currency. For example, in American dollar. A stronger dollar can make commodities more expensive for buyers using other currencies, potentially dampening demand and prices. And third is the commodities as economic indicators. Rising prices of industrial commodities like copper can signal strong economic demand, which might be bullish for stocks. Okay, now let's check out the goal of intermarket analysis. So, the goal of intermarket analysis is to understand the broader economic cycle, identify leading indicators across different markets, and make informed asset allocation decisions. For instance, if bonds are showing strength while stocks are weak, it might signal an economic slowdown. Okay, let's try to understand it with the help of an analogy. It is like being a global economist, simultaneously observing the weather patterns in different regions, that is, the financial markets, to predict broader climate shifts. Okay, now let's move on to the sixth and final type of analysis, which is the economic analysis. So, what is economic analysis? Economic analysis involves assessing broad economic factors at national and global levels to understand their potential impact on corporate earnings, investor sentiments, and ultimately the valuation and performance of financial assets. How does it work? Analysts tracks macroeconomic indicators by studying key economic data releases like GDP, inflation rates, interest rates, employment data, trade balances. Analysts also monitor government policies, fiscal policy, or the monetary policy, etc. So, what is the goal of this economic analysis? To understand the direction of the overall economy, identifying potential risks like recession or stagflation, or opportunities like booming growth, and position investments accordingly. It provides the big picture context for individual company and market analysis. Let's try to understand it with the help of an analogy. It is like a national planner analyzing demographic trends, infrastructure development, and fiscal policies to project future economic growth and resource allocation. Okay, so we have seen all the six type of major type of analysis. Now let's summarize all of them. So the first analysis that we have seen is the fundamental analysis. Fundamental analysis gives you the what to buy by identifying undervalued companies with strong potential. Next was the technical analysis. Technical analysis helps with the when to buy or sell, that is, timing, entry, and exit positions, identifying the trends. Third is the quantitative analysis. Quantitative analysis provides a systematic and data driven approach, often for larger portfolios or automated strategies. Next is the sentiment analysis. Sentiment analysis offers insights into market psychology, which can explain short term price movements that fundamentals or technicals might not fully capture. And next was the intermarket analysis. Intermarket analysis considers the relationship between different asset classes, for example, stocks, bonds, commodities, currencies, and even in different markets to understand broader market flows and identify potential shifts. And finally, we have seen the sixth number, which is the economic analysis. Economic analysis sets the overall macroeconomic backdrop, influencing all other types of analysis. Okay, so this is all from my side in this video, and I hope you have learned something new today. Thanks for watching it, and please like, share, comment, and subscribe to the channel. I'll be back soon with another video. Goodbye for now.